Can we start with the 10-year? Because since last time we spoke, it's ticked up some more. And we know that, what is it? The boiling water with the frog. You know, you started out just barely warm and it doesn't even notice. Is that what we're seeing here? And sooner or later, we're going to be in like boiling water?
So, Joe, it turns out, according to Adam Grant, that story is wrong. But what we're seeing is something very simple. The market mood has changed. It's no longer whether yields are going higher, but when is a move too big? That is what the market's trying to figure out. And that has three elements. It's about the economy, it's about market conditioning, and it's about the Fed. So far, people think that this move is, well, not welcomed, is fine, but keep an eye on it, because the faster we move, the more you're going to destabilize all three of these elements. That's why I've had it as a risk factor that I've talked to you about for the last 2 months.
The reasons for it, and it's a combination, I guess, and it's all related. I mean, we could be reopening, and earlier, a guy like Dr. Scott Gottlieb said it's going to be like Woodstock, which I immediately thought, wow. I mean, I remember that was crazy. I mean, if we reopen, or Roaring '20s, whatever you want to talk about, but there is some pent-up urge to go let everybody let their hair down. You can just feel it, Mohamed. So that might be coming. But we also got some hot inflation numbers, and a resurgent economy and a resurgent consumer might be inflationary. So they're related. But is that what the 10-year is sniffing out?
Yeah, it's the second one that we should worry about. You know, there's good reasons for yields to go up. The first one, economic activity, and there's bad reasons, inflation. And what we're seeing, interestingly, is that economists, even those who have long supported a big fiscal push, are saying be careful. Going big may be too big. You had Olivier Blanchard over the weekend who joined Larry Summers and saying, look, I've always supported fiscal injections, but this may be too much. This may result in an output gap. The multipliers are too high. And guess what? You'll get inflation. He didn't even mention financial stability risk. So it is the second element that you may destabilize inflationary expectation that the markets are really worried about.
Shepard Smith here. Thanks for watching CNBC on YouTube.